Berkshire Hathaway, owned by the very infamous Warren Buffett, is slated to make $776 million in dividends this year from Coca-Cola. This means that as a company, they'll make $2.3 million per day in completely passive income.
That's impressive.
But you know who would be disappointed with those earnings? Larry Ellison, the owner of the software company Oracle. Now, do you know why he would be disappointed? Currently, he owns 43% of the company, which means that he is raking in $1.46 billion, with a B, dollars per year. And while it isn't completely passive because he is still the CTO of the company, I can't imagine that he's at the office too much because the guy owns 98% of the 6th largest island in Hawaii, as well as having a $1 billion real estate portfolio. And while these are extreme examples for the ultra wealthy, I wanted to see if dividend investing still makes sense for the average guy like you or me. So off I went to talk to AI. Hey AI, I've been thinking about getting into dividend investing recently. Can you give me your thoughts on this investment strategy and if it's actually worth doing?
Sure, I'd love to. I think it's best that we break this conversation up into 5 parts so you can fully understand my thoughts. Sound good?
Yep, let's do it.
Let's first make sure we're on the same page about what dividends are. At its core, dividend investing involves buying stocks from companies that pay out dividends. Dividends are like a thank you gift from a company to its shareholders, usually given out as cash payments on a quarterly or annual basis. This strategy is appealing because it can provide a steady stream of income, which is why many investors, especially those looking for passive income, are drawn to it.
I think the key word here is passive income. Dividend investing, in my opinion, is really the holy grail of passive income because all you do is invest and nothing else, and the company does all the work, and then they cut you a check.
Sounds good to me.
I told AI that we were on the same page, and then it wanted to talk about the pros of dividend investing. And to be honest, in this section, it really made a good case about why it can be great.
Now, let's talk about why dividend investing can be such an attractive strategy. Dividends can provide a regular cash flow without needing to sell your shares, which is great for those looking to supplement their income or reinvest for growth. Another benefit is the potential for compounding returns. If you choose to reinvest your dividends by purchasing more shares, you can increase your holdings over time, leading to even more dividends in the future. This snowball effect can significantly boost your investment returns over the long term. Additionally, dividend-paying companies are often well-established and financially stable, which can add a layer of security to your investment portfolio. But also keep in mind that when you invest in dividend-paying stocks, you're not just earning dividends. You're also holding shares that can increase in value over time. This means you have the potential to profit from both the dividends and the rising stock price.
Now, this is how I always thought about dividend investing, right? Because not only do you own the underlying stock, but you also are able to get a dividend on top of that. And anecdotally, I think that in a lot of cases, when there is a dividend, people tend to hold those stocks longer because it's not just about the stock price. And while this all makes dividend stocks sound like they can't possibly be a bad idea, AI also wanted to share the cons, and I definitely wanted to hear all that too.
While dividend investing has its perks, it's important to consider the downsides as well. One potential drawback is the market risk. Like any stock investment, dividend-paying stocks are subject to market fluctuations, and their prices can go down, which might offset the income you receive from dividends. Another con is the limited growth potential. Companies that pay high dividends often reinvest less of their profits back into the business, which can mean slower growth compared to companies that focus on expansion and innovation. This might not be ideal if you're looking for high growth in your investment portfolio. Lastly, dividends are not guaranteed. Companies can reduce or eliminate dividend payments during tough financial times, which can impact your expected income. For example, during economic downturns, some companies may decide to cut dividends to preserve cash.
I think the point about limited growth is really important. Now, everybody knows that stock prices can go up and down, right? And dividend rates, those can go up and down, and sometimes they can even vanish. But at the end of the day, when somebody is giving a dividend, they're giving it at a cost. Really, it's an opportunity cost, right? Because they're not going to have as much money or innovation because that money is going to shareholders instead of staying within the company in the research and development departments. Now, I wouldn't say that that's necessarily a bad thing. I just think that if you are doing dividend investing, it's something that you should be aware of, that most likely those companies aren't going to be in, a really high growth type of mode. Now that we've covered the pros and cons, AI shared what it thinks investors should consider before trying a dividend investment strategy.
First, think about your financial goals. Are you looking for steady income, or are you more focused on capital growth? Dividend investing is generally better suited for those seeking regular income, but it may not align with goals centered on rapid growth. Next, assess your risk tolerance. While dividend-paying companies are often stable, their stock prices can still fluctuate, and dividends aren't guaranteed. If you're risk-averse, you might prefer companies with a long history of consistent dividend payments and investing your strategy to only invest in those companies. Also, consider the tax implications. Dividends can be taxed differently depending on your country and tax bracket, which might affect your net income from these investments. Finally, evaluate the company's fundamentals. Look for companies with strong financial health, a history of paying dividends, and a sustainable payout ratio. This will help ensure that the dividends are reliable and that the company can continue paying them in the future.
Ah, yes. Let's not forget about taxes. You see, dividends are income. And if there's income, of course, the government wants a piece of that. Now, I could sit here and go off on a whole tangent about how it's double taxation and how much I disagree with it, and the government really didn't do anything for that money, but that's a video for a different day. Anyway, unless your dividends are in a retirement account, they're going to be taxed, so make sure that you plan accordingly. And next is what you really came for the video, right? This is where AI actually is going to give its opinion on whether or not dividend investing is really worth it. And I think it made some really, really good points in this next part.
The answer largely depends on your personal financial situation and goals. If you're looking for a reliable source of passive income and prefer investments with potentially lower volatility, dividend investing might be a good fit. The steady income from dividends can be particularly appealing for those nearing retirement or anyone wanting to supplement their income without selling off assets. However, if your primary goal is rapid growth and you're comfortable with higher risk, you might find more opportunity in growth stocks that reinvest profits back into the business instead of paying dividends. Ultimately, the worth of dividend investing comes down to aligning it with your financial objectives, risk tolerance, and investment strategy.
Now, I couldn't have said it better myself. I think the most important thing to note here is that dividend investing makes sense, but it really makes sense as part of a larger investment strategy. In other words, I don't think it makes sense to only focus on dividend investing, but I do have it as part of my investment strategy and within my investing portfolio. And I gotta be honest, it is really cool when you get those dividend payments every month or quarter or whatever it is that the company gives. Now, before you go, there is one thing that I think that you should know. So there is another video that I have that I definitely think that you'll like. It talks about investment strategies. It talks about the worst strategies to avoid. And it's very important information. That video is right here, or you can watch my most recent video over here. Now, spoiler alert, the good news is dividend investing is not in this video as a bad idea, but there are some really important things that'll help you avoid dumb mistakes. And as always, remember to subscribe to the channel to unlock financial success one AI chat at a time, and I will see you in the next one.